be with everyone over Zoom this morning. And I'm going to bring up a slide deck, so if you'll bear with me just a moment here. All right. Well, this morning, I wanted to give kind of an overview of what we see in the state's economy. And specifically what I wanted to do is go through some findings of a project that our foundation has been working on called Minnesota 2030. And it's a 10-year look at the state's economy, kind of trying to answer two big questions. One, how is Minnesota's economy positioned for growth over the next decade? And two, what are some kind of fundamental strategies and frameworks that we can think about as we try to help the state's economy develop to its full potential? We started that prior to COVID-19. We're actually kind of wrapping up in February or March of last year. And then when COVID hit, we really had to hit the pause button on it. So much changed in the economic outlook and some other kind of structural components of our economy that we needed to wait, picked it back up in the fall, and are now going to be releasing it in early April of this year. So I wanted to kind of go through some of the findings there to show what Minnesota's economic performance was like prior to COVID-19, and then look closer at what happened last year, looking at the economic impacts of the pandemic, and then what the recovery has looked like since then. And then want to look kind of closer to the ground and see what we've heard across the state through our Grow Minnesota program, directly from businesses and some kind of trends that we've picked up there. And then just wrap up kind of thinking about what's on the horizon, how we might respond to some of these trends that we see in the economy. So first, thinking about where Minnesota's economy was at the close of the decade as we were heading into the 2020s. And, if you just kind of did a scan on the internet of looking at Minnesota's economy, you'd get kind of a fragmented picture. You'd see some reports that show us being kind of lagging the national average and lagging other states in economic performance. You'd also see articles that show Minnesota kind of near the top of the country of other states for a whole range of economic indicators, being among the best economies in the country. And then you'd find a lot of research and analysis on Minnesota's disparities across regions and across demographic groups. And so, I think it kind of leaves people without a clear picture of exactly what was happening in the state's economy. And, as we really dug into the data, we worked with a company called IHS Markit, that's a global forecasting firm. We tried to look at a whole range of different metrics and indicators. And I think that really the best way to describe what we saw through that analysis is that one, Minnesota has a highly developed economy, and I'll kind of go through what I mean more by that in a minute. But at the same time, our economy has been growing at a relatively slow pace over the past 2 decades, both compared to previous years and also compared to the U.S. economy as a whole. And then third, there are some substantial differences across regions in the state and across demographic groups. So looking just at the statewide data doesn't always give you an accurate picture of every part of the state's economy. So first, thinking about what we mean by saying that Minnesota has a highly developed economy. And these are some of the things that we mean by that. If you look at metrics like per capita income, GDP per capita, labor productivity, Minnesota really produces a high economic value given our population size and number of people in the workforce. At the same time, Minnesota has among the highest labor force participation rates in the country and has kind of structurally lower unemployment rates than the US as a whole. And we'll show some of the data on that as well. In addition to having kind of broad participation in the workforce, we also have a highly educated and skilled workforce. When you look at Minnesota's educational attainment levels and our kind of clusters of some highly skilled occupational groups, Minnesota has some real competitive advantages there. On top of that, when you look at rates of innovation, Minnesota ranks really highly in the top 5 for patent rate activity, which is really kind of the most kind of core metric of innovation, of developing new products and technologies and bringing them to market. And that's very much tied to the types of companies and industries that we have represented in the state. So obviously, Minnesota is a hub for large corporate headquarters, companies that largely started here as startups at one point, and were able to stay and continue growing and expanding over time. And Minnesota has some real advantages in key industry sectors as well, like healthcare and medical technology, food and agriculture, again, corporate headquarters, our financial sector, high-tech manufacturing, and other industries as well. But at the same time, though we have some kind of deep vertical strengths, Minnesota has the 5th most diverse economy in the country, meaning that our employment is really spread pretty evenly across major industry sectors. So I want to just show a few kind of data points to demonstrate what we're talking about here. So this shows Minnesota's per capita income as a share of U.S. income levels, and this is a great data point because it's one of the few that goes past the 1950s. You can go all the way back to 1929, and you can see how Minnesota's economy really transformed over time in the last century, starting out looking really similar to our neighbors in the upper Midwest. But then by 1973, going above US per capita income levels, and really rising and staying there ever since. And so this is kind of an example of Minnesota's high value per person in the workforce. And Minnesota also has structurally higher employment rates than the US. This chart shows labor force participation, comparing Minnesota in the blue line to the US in the red. You can see that over time, Minnesota's workforce participation has been significantly higher than the US, typically ranking anywhere between number 1 and 3 in the country. And off to the right there, you see Minnesota's unemployment rate. This goes all the way back past 1980. You can see that whether we're at the top or bottom of a business cycle, Minnesota's unemployment rate tends to be lower than that of the US economy. And that's been really critical in this past year as unemployment spiked in March and in April. And you can see that those numbers on the right, that's our April unemployment numbers. Minnesota stayed, we obviously did have a spike in unemployment, but not what we saw at the national level, and far below some other states that went up into the kind of low to mid 20% range. This chart here shows patents per 1,000 people. And here you can see that, again, Minnesota looked pretty similar to its neighbors for a number of years, but then started to pull away and started to really develop new products and technologies at a higher rate in the last couple decades of the 20th century. And when you compare Minnesota to not just our neighbors, but some of the top states for patent development, you can see that we're kind of right up there in that top tier, just behind states like Washington, California, Massachusetts, and so forth. So those are some examples of Minnesota's highly developed economy, but at the same time, Minnesota's economy has been growing relatively slow, kind of at a moderate to slow pace over the past couple decades. And you see this whether you're looking at a real GDP growth, employment growth, or even growth in per capita income. Our levels are still high, but it's been growing slower. And this chart here shows real GDP from 1977 to 1997. You can see over that 20-year stretch, Minnesota's economy expanded faster than the US as a whole, averaging just shy of 3.5% average annual GDP growth, which is a really healthy rate of growth in the state economy. But you look at the more recent time frame, and you can see that Minnesota's growth has both slowed in absolute terms, slowing down to an average of 1.7% annual growth since 2000, and also trailing just under the rate of growth in the US economy. So there's been kind of a shift in our growth trajectory. This becomes even more evident when you look at job growth over time. So this shows Minnesota's job growth compared to the US, turning it into like a box score, saying, did Minnesota have faster job growth, slower, the same as the US? And from 1970 to 1999, Minnesota had employment that expanded at a faster rate 22 of those years. So most years had job growth faster than the US. But looking at the last 2 decades, and that's really flipped. Minnesota has only grown faster in 5 of those years. And the same was true for 2019, which isn't shown on this chart. And it's kind of notable too that the years that we did expand faster than the US economy, it was in years during or in recovery from a recession. So, what do we kind of make of that? What are some of the explanatory factors? Obviously there's a lot of different pieces to it, and we really didn't set out to try to make causal claims of, what factors are most most linked with the slowing of our economy. But 4 things did kind of really show up in the data as we were looking at it, that at least happened in correspondence with these trends. Most notably is that Minnesota has had slowing labor force and population growth over time. And this has been driven largely just by our demographic composition, but also some US regional migration trends. And this chart here shows annual growth rate of Minnesota's core working age population, that group of individuals between 15 and 64. And you can see that we had pretty healthy growth in the kind of late 80s and 90s in this age range. And that after 2000, it really started kind of falling off pretty sharply and has steadily and consistently fallen since then. And as we look at projections going forward, that's going to continue. Our labor force and population growth is going to grow at just about a 0.1% over the next decade. So this is a challenge that we just don't have that growth and capacity in our labor force that we have in past decades. And again, demographics is driving a lot of this. It's just kind of a simple fact of a lot of people aging out of the workforce, retiring at a faster rate than we have younger people entering the labor market. And so those demographics are pretty durable. It's tough to really fundamentally change that. But migration is kind of the other piece of it. And here, again, when you look at Minnesota's net domestic migration, this is where we've seen the biggest challenge. So, maybe contrary to what some common perceptions are, Minnesota in the late 80s and 90s actually attracted more people to the state than we lost from the US. We had positive net domestic migration. But after 2000, that really turned around and we had 15 consecutive years of net domestic migration losses. You can see that international migration helped keep us from going into the red for total net migration. But we kind of peeled back the layers a bit to see what was going on, why we attracted more people in the 90s, and then why that trend turned around after 2000. And what we found is that in the 90s, Minnesota attracted a lot of people from the surrounding states, from other Midwest states. And we were actually losing people to the Sun Belt and some of the kind of large population hubs on the coast. Well, after 2000, those two same trends were in place, but our in-migration from neighboring states slowed as our out-migration to Sun Belt and coastal hubs accelerated. And so we had kind of a slowdown of the in-migration from our neighbors, and then an acceleration of out-migration to states like Arizona, Florida, California, Colorado, and some others. So a second factor is tied to that. When you look at where economic growth has taken place in the US economy over the past couple decades, it's largely been in the Sun Belt and western regions and in a few kind of coastal tech hubs. And this chart shows average annual GDP growth since 2000. you can see that Minnesota's economy expanded at the same rate as the region that's in the Upper Plains states, 1.7%. But all of the regions except for those on the west and southwest grew at kind of a slower pace. So it's not that Minnesota has really underperformed in the region. We just haven't been the exception to the rule of kind of more moderate growth in our region. And this is even more evident when you look at growth among MSAs, metropolitan regions in the US. You can see that 45 of the top 100 fastest growing metro economies were in just 5 states. And you see them there: California, Texas, North Carolina, Florida, and Washington. And you can see where Minnesota's MSAs ranked. Rochester grew at a relatively fast pace, and Mankato also fell within that top 100. But the Twin Cities, St. Cloud, and Duluth farther down on that list. And then third, there's kind of an industry component to this as well. Minnesota had kind of been a leader in some high-tech activities from the 1950s through the 90s, and with that really kind of surging in the 90s. But then as tech growth really shifted from kind of hardware to software and IT services, Minnesota kind of lost ground to some other states in the country. And here you see job growth in high-tech industries has lagged behind the U.S. and some of our competitive peers across the country. And that's industries, but if you look at tech occupations that might be in any industry, you see kind of the same trend. Not totally at the back of the pack, but below the U.S. average and below some of our neighbors and other peer states. And then the last thing I'd note here is just productivity growth. If an economy can't expand through growth in its population and labor force, it needs to make up for that in productivity growth. And Minnesota has just followed national trends of slowing productivity growth. And you see it here in the chart. So those are kind of 4 big themes that stand out that relate to Minnesota's slowing economic growth. And it doesn't change any of the assets and strengths that we saw in the first section. Minnesota still has a really strong and innovative and highly developed economy, but just one that hasn't been expanding particularly fast. So that's us heading into the decade, and we were kind of thinking about what type of strategies and actions might we take to really leverage the strengths that we do have, but to help our economy be growing and thriving in the coming decade. Then, of course, COVID hit in March of last year and really, pretty dramatically changed our economic outlook and changed a lot of things about how sectors were performing and other things in our economy. So this is a slide that I presented at this event last year, just about a month before we got our first reported case of COVID-19 in the state. And you can see, as we were thinking about kind of near-term factors that could influence our economy, I see coronavirus down there at the bottom of that list and trade environment, because at that time it was still kind of largely disrupting some supply chain issues in China, but hadn't, just the kind of potential impact hadn't been realized here in the state. So it goes to show just some of the limits in being able to plan and forecast as well. But this is what the impact looked like. So this is monthly change in total employment in the state, going all the way back to 1950 and up to April of last year. And you can see that Minnesota's employment contracted by over 13% in April. And if you compare that to the steepest month of job losses in any recession prior to this one, the magnitude and scale of the downturn was just far greater than anything we've seen in the state's modern history. You can see nearly 3 times steeper than the Great Recession. And so, just kind of unprecedented shock to our economic system. Of course, this was different this time around because this downturn was caused by deliberate actions to halt activity to slow the spread of the virus. So the kind of fundamental position that businesses were in was different, and there was an expectation that a lot of these losses would be short-term in nature, way more furloughs than permanent layoffs that occurred, but still a lot of uncertainty and kind of shock in our economy. And the impact was spread across every major industry sector, but you can see it hit leisure and hospitality and other services, which include things like hair and nail salons and laundromats, some of those kind of local service industries, by far the hardest. That's where impact has been intensified the most. And this has come into play where Minnesota's diverse economy has really helped us. That we've had some sectors that have been more shielded from these impacts, and have been able to lean on some of those strengths. And that's part of the reason why you see Minnesota's unemployment rate not spiking as high as what we saw in the US. If you kind of think back to the chart that I showed earlier that compared Minnesota's unemployment to the US going back past 1980, you see that same kind of trend in place last year. Our unemployment peaked at 9.9% in May, but then pretty steadily fell from there. And we ended the year at 4.4% unemployment, which is still higher than it was prior to the pandemic, but not dramatically so, and far less than where we were at the same point in previous recessions. Looking at this across regions, at the beginning of the pandemic, certain regions like Northeast Minnesota and the Twin Cities, its unemployment rate really spiked a lot higher. So there's more variance across regional economies. You can see those differences have lessened over the past year. By December, Northeast still has higher unemployment than other regions, but that difference has shrunk. So there's been some kind of convergence and evening out across the state in some of those employment and labor market impacts. So let's kind of talk about Minnesota's recovery. So we had this big plunge in March and April, but then you can see that as of May, our state started its road of economic recovery. And we actually had 6 months of consecutive employment gains before dipping down again in November and December of this year, as COVID cases really spiked both here and across the country, and new restrictions were put into place, limiting capacity and again some of those kind of hard hit industries like food service, accommodations, and so forth. So we ended the year just over 246,000 jobs below 2019 levels. So still kind of a large gap to make up, but hopeful that we can kind of get back on a recovery trajectory from here. And this is the same chart, just thinking about it in percentage terms of kind of our share of full employment. And you can see that we got kind of close to 94% and ended the year just shy of 92% of full employment. So what we've been thinking about at the Minnesota Chamber and our partners across the state have been is, how do we speed up the recovery and get back to full strength as soon as we can? What are some of the levers that can help influence the speed of recovery so we can get Minnesotans that have been displaced back in employment, where we can get businesses in a position where they can really kind of stabilize and grow from here. And as we look at some of the forecasting data, this is the IHS Markit forecast from January, which is the most recent that we have right now. And as of that time, the forecast shows Minnesota surpassing pre-COVID GDP output by 2022. And so again, there's maybe different factors that could influence this, but this is, as of right now, what maybe kind of a time of recovery would look like for our economic output. Employment is likely to lag slightly behind that, and their forecast shows Minnesota returning to peak employment by late 2022 to early 2023. And they note in their report that the timing of recovery is still dependent on a number of factors, of which there's still uncertainty. Will there be continued or additional restrictions put on businesses to mitigate the spread of the virus? What does the rollout and efficacy of a vaccine or treatment regimen look like? All of these things will come into play. But so far as we can see in the forecast, we might expect Minnesota to remain in recovery mode through this year and into next year. In terms of unemployment, they forecast that Minnesota will hit a low point of 3.1% in 2022 as the economy recovers. But what's interesting again is if you kind of look at that unemployment trend this time around compared to past recessions, our unemployment really came back down a lot faster than it did in the Great Recession that took 9 years to get down to 3%. This time it is projected to take just 2 years. So that is a major benefit both of kind of some of the underlying dynamics of this recession, but also speaks to some of the trends that we talked about earlier with just our tighter labor markets that are driven by our kind of slowing labor force growth. And in addition to just kind of overall recovery in employment output, the pandemic obviously has raised some kind of bigger questions about how our economy is structured and some kind of bigger trends in how our economy works. The future of remote work is obviously top of mind, and it's still too early to tell exactly what the future looks like in that. But I think it's safe to say, that the longer we all have become comfortable and kind of built up capabilities in meeting virtually and working remotely, at least, for certain kinds of positions, we're not going to just return to kind of the pre-pandemic norm. That this will have some kind of longer term impact. And so it's worth thinking about exactly what some of the opportunities and challenges are related to that. Linked to that, thinking about the vitality of our downtown cores, especially in kind of our largest urban settings that have seen some real impacts to their commercial real estate activity, some other some other trends that could be concerns. What does that look like in the future? Thinking about things like automation and productivity, companies really had to shift in a lot of ways, and in some ways, we see automation, digitalization accelerating through this time. At the same time, the impact on business revenues and firm level performance has constrained some business investment. So it's not exactly clear what we might expect there, but it's worth tracking. And then you see some of the other things there too that I won't go through each one, but other kind of larger factors that could be influenced by changes that we've seen over the past year. So I want to shift gears a little bit and just kind of think about what we've heard directly from Minnesota businesses. So that's kind of the macro view. But through the Grow Minnesota program, we get a chance to hear directly from companies across the state. The Minnesota Chamber, in partnership with the Winona Chamber and about 90 others, we get to get kind of a direct line of sight into what's happening on the ground in Minnesota companies. And as we kind of looked at some of those trends, 4 takeaways jumped out to us. One, we still see that businesses are struggling to find workers. Not all of them, but still a higher percentage than one might expect, given kind of the severe job losses that we saw last year. Second, not surprisingly, the pandemic just brought major impacts on business revenues and operations. Again, particularly in the small business sector, in leisure and hospitality, other businesses that were more subject to some of the restrictions put into place. This really brought some severe impacts on our business community. At the same time, the private sector has been very innovative and adaptive to these circumstances, and we see that in the rate of businesses that are introducing new products and services, that are adding new technologies, and even as companies kind of think about their near-term investments and new capital equipment and facilities, we see that remaining relatively steady. And then finally, there were some really large-scale and sudden supply chain challenges back last spring and summer And what we saw was that businesses largely succeeded in navigating through some of those challenges, being able to get both the kind of PPE and other COVID-related products that they needed to operate safely and kind of adopt best practices in that way, but also navigate some of the other supply chain challenges from global suppliers, other plants that had shutdowns and so forth. So that maybe went smoother than kind of the worst fears early on in the pandemic. And this is that chart showing the share of businesses that tell us that they're having difficulty finding workers. And this goes back to 2008-9. You can see in 2009, only 20% of businesses said that it's hard for them to find the workers they need. And that really kind of steadily increased over the next decade. And you can see what that did in this past year, that it did decline to 48.6% of businesses that they were having a hard time staying fully staffed and finding and being able to hire the way they needed to. But that didn't look like 2009. It looked more like 2012. And that you can see that after the second quarter of last year, that started to rise again. And you see a couple kind of quotes that just demonstrate the types of things that we heard from businesses in that regard. And it's interesting that chart really aligns well with what you see in DEED's, the Department of Employment and Economic Development job vacancy survey that they distribute on a biannual basis. And this shows the number of unemployed persons per job vacancy, per job opening, which is kind of a rough measure of tightness in the labor market. And here too, you see that second quarter of last year looked like the second quarter of 2012, not 2009 at kind of the peak, peak unemployment rate. And so again, just kind of shows some of the differences of the situation that we're in now compared to past recessions. When asking businesses about adding new products and services, you can see that rate held steady last year, and as companies were kind of planning into the next year, that actually increased from what we've seen in the past, that more businesses are planning to introduce new products and services, as they're shifting operations, finding new, kind of new platforms and channels to be able to reach customers. A lot of businesses having to shift to digital, kind of digital platforms and operations. And you see that too in the technology investments that companies are making. So the share of businesses that are adding new technologies was up last year, and it's up even further in thinking about planned investments in new technology for the coming year. So this could be, perhaps kind of a silver lining of this time, is that companies are making some important investments that could have longer term implications for their performance. And then finally, just looking at plans for new capital investments. So either major new equipment, new facilities, expansions to their existing facilities, and tick down just slightly, but held basically steady from 2019 levels. So this is an encouraging sign that businesses are still relatively optimistic about their long-term investment in the state, and we'll kind of continue tracking that again this year. So I just want to wrap up with a couple slides here and think about what Minnesota can do to accelerate economic recovery and position the state for long-term growth. And the Chamber released a blueprint for economic recovery last month, and encourage anyone to go to our website and kind of read some of the specific policy recommendations and other strategies that we recommend. But they really kind of fall under this framework of most immediately helping to stabilize at-risk businesses. There's a lot of businesses that, through no fault of their own, just had to halt operations, have had major kind of restrictions put on the capacity that they can operate at. And that's really the first order of priority, is to help stabilize those businesses. And of course, it's not just the businesses themselves that we need to help, but their viability directly translates into economic well-being for communities around the state, in the form of employment, overall just community stability, generating revenues for local and state public goods and core services. But beyond that, we want to think about how we can accelerate economic recovery in the short term. And some of the areas that we think about is making smart investments in things like tax competitiveness, really trying to help entrepreneurship and innovation in the state, areas where we've seen some kind of emerging strength. Making investments in broadband connectivity that has become even more important in this time where more people are working remotely, where that kind of digital capacity has been increased. And also things like childcare that can be a major barrier to people getting back into the workforce, and has been kind of a longstanding challenge for businesses and individuals across the state, but has become more intensified over the past year. All these things can help spur recovery now, but also kind of set up the state well for long-term growth. And that kind of leads us into what we're thinking about with this Minnesota 2030, thinking about kind of a framework for long-term growth. And so our report's trying to think about how the state can build on some of our core strengths, and where those align with where we see the economy heading. How do we really kind of build on and capitalize on those strengths? What advantages does Minnesota have to compete in the digital economy, an area that we've have kind of an above average concentration of activity and technology and IT, but that we've been growing slower in? How can we kind of leverage some of those strengths that we have? And you see the other ones there. So looking kind of again at a big picture, but thinking about what are some of the components that we might want to work on, and what would strategies look like to really advance efforts in these different areas. And then finally, I'll just wrap up with saying that Grow Minnesota, our business retention work around the state, is a really critical piece to helping companies stay, grow, and expand here in Minnesota over time. And just fortunate to have great local partners like the Winona Chamber that are kind of a direct, direct line of sight into their local business community, and can be, that can provide that direct assistance to connect companies with resources, help them solve key problems that they're facing. And you can see that over time, our programs assisted over 2,700 businesses, and that's become even more important in this past year. If Christy or anyone else wants to speak to that in a moment, I think just the work that's been done to help businesses navigate some of these challenges has been extraordinary. And at the same time, continuing to collect insights into what's happening on the ground in Minnesota companies. There's a lot of things that economic data can tell us, but there's some important things that it can't. And really going out directly to businesses and finding out what they need, and kind of what their outlook is still critically important. And then, to do this in partnership, to not just work in isolation, but to really scale our knowledge, our resources, our connections, to help, create kind of a network of business retention programs and efforts around the state is a critical piece of helping our economy in the coming years. So I'm going to leave it with that. I'll turn it up. Happy to answer any questions, and also, Chris, if you want to jump in with anything, please do.
Thank you, Sean. This is such great information, and I don't know if you want to stop sharing your screen so everybody can see you. The Grow Minnesota partnership, as he said, is really important. I think it's really been a valuable tool, both in Willmar, and I've seen it really do great things here too. And some of the cool things that happen as a result of those visits are done through the advocacy piece that we, as we pass that information up to the Minnesota Chamber, it sort of leads some of their policymaking decision and what they, how they support the businesses and elevate their voices when it comes to legislative sessions too, especially as it relates to workforce or tariffs or things like that. So that could go to Washington. Another thing that I think is really great and I've watched this physically happen in Willmar more so than here right now, but mostly because of the pandemic, but I've seen businesses look for things that they can't get. And through Grow Minnesota, we've connected them with someone else in Minnesota that creates that item or service they need. And we end up connecting people to grow their businesses together. And that's pretty exciting stuff, because that's exactly what this is designed to do, in a caveat of ways. I know that we have a few of our committee members from that committee in this call as well, but I'm gonna open it up for questions. So does anybody have any questions for Sean? Go ahead, Scott.
Thanks, Christy. Sean, I agree with Christy. This was excellent. Thank you. I wonder if you have a theory about what's going on in the southeastern region of Minnesota. The data you showed had us at 3.9% unemployment currently. That made us the best in the state for unemployment. And back in May, we were kind of in third place. Now we're in first place. I'm just curious what theory you have about what is it about the southeastern Minnesota economy that makes it a little more unemployment proof? Is it healthcare or what is it?
That's a great question. And also you have the coolest background that I've seen on Zoom over the past year. That's great. Yeah, so thinking about some of the kind of components that lead to that, Minnesota's whole southern region is a little bit more, has been more shielded from the worst of the impacts from this downturn. So having a smaller share of activity in leisure and hospitality, which is accommodation and food services, different kind of arts, entertainment, recreation industries, there's a presence in that part of the state, but not, it's below that of other regions like the Twin Cities and Northeast Minnesota and below kind of the US as a whole. So a greater share of activity in manufacturing and healthcare and other industries that were deemed essential, that demand didn't take the same kind of hit as it did in other industries. And then, also having some large kind of economic engines in the region that have continued to see investment and growth. Obviously what's happening in Rochester, kind of across the Southwest region, you see, some still really strong performance from kind of top companies and businesses. So I think it's really an industry story that, the region is just positioned well in sectors like manufacturing and healthcare that, yes, have been impacted, but not to the same degree as some other kind of local service industries. And then, this is maybe more anecdotal, but I think that the the Southeast region has a pretty strong network of kind of a support ecosystem too for businesses. Both it's, a lot of really active local chambers, growing kind of coordination across business startup and entrepreneurship activity. And so I think that you have kind of an economic development ecosystem that really helps support businesses well in this part of the state.
Any other questions? Most of you don't have cameras on, so if you have a question, just unmute yourself and ask away.
This is Larry Lundblad. I just wanted to reflect a little bit on the unemployment rate, or ask the question that reflects those that are actively looking, right? So the actual number of folks that may be underemployed or unemployed that have quit looking is higher. Do you have any sense of what that might look like across the state and especially in the Southeast?
That's a great point, and I failed to mention it earlier, but it is important to know that part of the falling unemployment rate has actually been people dropping out of the workforce and not getting counted in that unemployment rate. So that's the wrong way to see our unemployment go down. We don't want to see our labor force participation decline. That's a really kind of key strength for the state to maintain. And so I don't know what that looks like kind of regionally. I don't know what labor force participation has been. I think it's not tracked as frequently at the regional level, but I could dig into that and try to get back to you or Christy with an answer on that. But we have seen our labor force participation go down from, it was about 69% prior to the pandemic, going down. I think I want to say it bottomed out around 64, 65%. So going down a few percentage points. And that is part of the answer. So the actual unemployment rate, if you want to think about it that way, might be higher because some people have just dropped out. But in some cases, it might be, it's hard to tell how voluntary some of that decline is. Is it people that are, they were kind of close to retirement, they're just moving it up 6 months, or people with young kids at home that don't have childcare, they're going to get back into the workforce once they have more childcare availability, or their kids are back in the classroom, but for right now they just can't take a job. It's hard to tell what some of the factors are there, but it's a really good point that you have to consider that in thinking about the unemployment rate.
Good, thank you. Excellent information, by the way. Thank you very much.
Sean, I have a question, I guess, also related to employment. Do we know how, I think, as our state is positioned and how we look into the future, how net migration loss is going to affect our workforce?
Yeah, it's a big question, one that we're really thinking about a lot. And there's just, it's too early to say. We don't have enough data on what the pandemic will do to both short and long-term migration patterns. Early on, we saw some of the biggest cities in the U.S., like New York and LA, have a somewhat sizable outmigration of people that were leaving those kind of really large, dense urban centers and going elsewhere. But I think that two things on that. One, there's a risk for Minnesota that because remote work has accelerated and a lot of companies are really just kind of planning to stick with that, the mobility of talent is higher and puts us at a risk for people that might work for a big company here. A lot of people come to Minnesota because we have we have a really strong economy and we have a lot of job opportunities. But it puts us at risk of people going to Florida or Arizona, where it's warmer in the winter, and continuing to work for a company here. At the same time, when you think about some communities outside of, especially the Twin Cities metro, there's maybe some opportunity that I think Winona is a community that's well positioned to capture this. That has some kind of natural, kind of recreational and lifestyle advantages that might draw people that work in the Twin Cities, but maybe they want to find more affordable housing. They like the outdoor kind of amenities that regions in the Central Lakes District or Northeast or Southeast Minnesota have to offer. So, I think that's an area that, we get into in the 2030 report of thinking to start digging into that now and maybe developing some early kind of pilot programs and strategies to capitalize on any of those opportunities that have opened up, because we've been in this situation for long enough that, again, I don't think we're kind of going back to 2019. I think it is going to look different.
Thank you, Sean. Any other questions? Perfect. Well, I will, again, thanks, Sean, for joining us virtually this morning. And thank you all for taking the time this morning to listen to Sean talk about the state of business. Before I let you all go for the day, I want to remind you that we do have Eggs and Issues on March 12th. It's State of the State with Senator Miller and Senator Goggin, Representative Pawlowski, and Representative Drazkowski to give us a state of affairs in legislative session and talk to us about what's happening at the Capitol. So virtually at the Capitol. So join us then. Make sure that you watch for registration for that. And with that, I will let you all enjoy your Friday. Thanks, everyone.
Thank you.
Thanks.